This is Christian Farmer Certificate Trade Group, and this is your end of day market recap for Tuesday, March 3rd. I'm looking at a chart of SPY here. I usually start with the spreadsheet, but maybe I'll just kind of start with the indices. We'll do something different to start today's video, and this will be a quicker video today. So first of all, SPY. What do we see going on here? Well, we know that the last 3 months or so, depending on how far you want to consider this the range, we've been getting to the bottom of the range, and we've been essentially we've been bouncing. And what I'm looking at here, I'll move this so that you could make sure you could just see this chart here. But I like to look at both the daily chart and the 1 hour chart. This is the range that I've been referring to, which is basically just the January range. Of course, you can maybe go back a little bit further to that, to December, to where this range kind of started. But that's a break of the range of where we were intraday, where we started the day. Now we did come back, so that's a positive that we've rallied from the lows like we did yesterday, but we're still not in any, we don't really have anything to hang on to. And I think once we look at this 1 hour chart, you can kind of just see for now, we're going in this channel right now in a period of kind of lower highs marked by last week. And I think that was maybe Thursday, where we kind of hit the highs for the week and then began to kind of move to the downside. Yesterday, we made a new low out of this, just what I've got on the screen in front of you. We bounced, but again, we kind of came up. This was the top of the value area for the week, and we couldn't get through that. So we're coming upon these short-term resistance levels, hence like the top of the value area for the week, and not able to turn the corner. Today, we kind of did the same thing, and I went long some SPY, and I took a good healthy target there right at the bottom of the value area, because I knew that becomes the hard part. The easy part, from like a standpoint of how price action works, is things can kind of float around until they hit a major support. It doesn't even have to be major, but in this sense it's short term, but they can float around until there's like some support or there's resistance. So the easy part is bouncing. But if you're not bouncing too far, and if you're not really taking anything, you're not materially changing the picture, then that's kind of what we have here. Then there's no change in anything that's taking place. So that's the level that I would watch for tomorrow, 681.60. We could do the same. So again, right now, it's nice to see that we bounced, and it's nice to see that buyers are kind of coming in, but we're really just not taking back anything yet. And it may just be too soon. We're 2 days into this conflict with Iran. Maybe it's a little bit too soon. I think everybody wants something immediate these days, right? The market things, I think, do develop faster. So I think things, if they don't materialize fast enough, then people kind of get worried. So that's kind of in the back of my mind. But you kind of just have to remember how this SPY has been looking even before this Iran situation. It hasn't been particularly looking good over the last couple months. It's funny that I say things developing quicker. I was just looking at a headline on CNBC where they ran on the bottom of the screen. They say, "Is this a forever war with Iran?" Well, it's been going on for 2 days. So it seems to be opposite ends of the spectrum. Either you want things to rebound really quickly, or if not, this is a forever war. It's probably not going to be either one of those things. So I think that we can probably come to the conclusion about that. Here's what the Qs look like, and here's my issue with the Qs. So again, the good, and I just tweeted this out shortly ago, but the good is we've been hanging around this low, which is the major support for Qs, by the way, which is which is the top of the value area for the year. You can see this on the weekly chart a little bit more clearly, but we've kind of come upon this level very closely when the first time that we got down to it, and then we did this again a couple weeks ago, and now we're back here again. So the lows have not really been, the value area has not been breached, but you can kind of see how this weekly chart has been developing. There's a lot of long wicks here. Every time the price tries to kind of turn the corner, it's not able to do so and fails. And then if we kind of look at this we go from that 1 hour chart to the weekly chart. And I should have, at least I thought I had a trend line drawn here. Maybe I don't, but yeah, I guess I don't. But you could basically draw a little bit of a trend line in here and say, this is also making a series of lower highs since the middle of last week when we try to rally up to the bottom of the value area and couldn't really go any further here. So a little bit of deterioration. You could also see this with the RSI a little bit too. Notice how that's kind of been coming down. So that's where we are right now. We don't have a necessarily a breakdown um, that's going on because we're holding it, but we don't have any major turn that we're seeing. Now, here's where it kind of gets interesting. When you break apart the Qs or break apart the biggest sector in sector in the S&P, which is tech, which is 32%. The question is, what's going to be the leader if we are to turn the corner and go higher? And just to play devil's advocate and say, okay, let's hope markets resolve higher. And that usually, buying, they were talking about this. This is a kind of good conversation to kind of get into. But, usually when there's geopolitical situations like this, there's usually good buying opportunities. I say usually because nothing's 100%, but usually they're good buying opportunities. So I would think I would err on that, hey, this could be a good buying opportunity. What I would like the semis, if we look at the semis on the 1 hour chart, which have been the leader in tech, just didn't do anything today. Right, here's where we opened for the day, and a little bit of a move back, but you could see just really kind of like lethargic for the day. Whereas software had much more to it. But let's go back to the daily chart here for the semis. I would like for the semis to kind of continue higher. I would like to see a move above 397.70, which is back into the value area for the month, and I think that's going to be key for the Qs. The other alternative is, how does the software rally continue to progress from here? We've now spent, by the way, we've been here for about a month down in this level. We tried to rally a little bit here. The first week of February, couldn't do it. We've explored lower levels with that Centrini post that got everybody all nervous, and hence that was the low that we experienced. And since then, we've been trying to come back. So the level to watch is 84.94. But yeah, I mean, you can go through some of these charts like a service now. I think I think made some advancement because that's above the 5-day moving average. It's about above the 20-day moving average. Maybe these things can break back up to the 50, and then maybe they fail. But I just don't think that they're going to be leaders at this point. Um, a Palantir also has gotten above the 5 and the 20. Had a nice move yesterday and tacked on some gains today, up 1.4%. I think this is going to be tough too. Maybe it can rally up to where that 50 and 200 is. But again, for me, I like to be in trends. I like to think that things are going to go on for a while, just as what we've seen. I like to look for things that are going to materialize like we've seen over the last 2 years in the semiconductors, where things are just up and up and, the dips get bought and it continues to trend. I don't know if you're going to see that in software. I think there's just too much overhead supply. Anyway, that's my thoughts on that. So what else is going to be what what else is going to bring us up here? I don't know. I think that the financials, there's a lot of concerns about credit right now. This is what XLF looks like. The industrials, which were acting really well over since the beginning of the year, they're back into that 20-day moving average. So they're holding on, held above the 20-day moving average. The materials, big break today, down 2.5%. And again, these things have been up a lot. I've also talked a lot about the optical names. The one thing I don't like about this light, and I tried trading this a little bit today. I made some money with this name yesterday with that announcement with Nvidia, but I don't like the lower high in the RSI. So I gave up on the name today. I had bought it. I had bought the dip in this today, and I decided to not to stay with it. COHR, just an inside day today, by the way. But again, these names have gone up a lot, and it's okay for them to come in at this point. They've just had such huge rallies at this point. The memory chip names look weak. SanDisk finally broke its 20-day moving average. Again, doesn't mean that the rally is completely over for SanDisk, but that's a decent break below the value area as well as the 20-day moving average. And the whole group looks tired. Micron is back and down into the 50, revisiting these lows from back earlier in February. WDC really doesn't look particularly good, even though again still in an uptrend, but maybe just due for some consolidation. STX looks the worst of all the ones that I covered so far. That's a break of the 50-day moving average for Seagate. So that's kind of what we have. I don't want to go through every semi game, and like I said, I want to keep this video a little bit shorter today. But I think that this market, it could be in a little bit of a short term. Unless some strength really starts to come to stay in the software space. Um, then I think that the tech move might be a little bit challenged. Here's CrowdStrike. It reported at earnings after hours. It doesn't seem to know what it wants to do quite yet. Try to rally a little bit. I think the guidance was pretty good for CrowdStrike. Let's see if I have this up here. Sees first quarter revenue 1.36 to 1.364. Estimated 1.36, so it's kind of right in line. So it's not a blowout report, but it's not bad, considering the stock has been beaten up pretty decently. Topped out at 540, stock's at 380. So I don't know if that's enough. That guidance is enough to kind of get it going. Just a couple macro things to look at. UUP. Again, this is important on days like this where you've got a lot of volatility. This went up and took out that VPOC at 27, right around like 27.55, and it stalled there. So, you know, I think that that's actually a positive, even though I don't like this level up here. From VPOC to VPOC at this point, here's where we saw demand, and here's maybe some overhead supply. So I would keep an eye on that level. I don't think that's going to be good for equities if the dollar continues to get above that 25.55 level. Crude, I think also important to kind of look at it at this point. Did not close anywhere near the highs. It also took out that upside VPOC. And that could be it for crude for a little bit. Again, I'm kind of reaching here a little bit. It might be a little bit early to call that. But where I would be wrong is if we get back above 77. Again, remember that these are overhead supply when a VPOC is above the value. By the way, if you don't know any of the definitions, somebody asked me about this. You could go right to I believe it's pinned on my Twitter page. If you want to learn anything about the market webs and volume at price, just click on the link that's there. But I believe it's on just straight on marketwebs.com is where you can find more. But on Twitter and go to my pinned tweet, and you can read all the definitions and any of the theory behind using out volume and price, and why it's a much better indicator to me than using anchored VWAP. There's crude. I also wanted to just look at the VIX as well. You got a really toppy looking candle. Once again, I've been talking about this for a while now, that equities have been in this range. So as the VIX. For a while, it was staying. It would hit this 22, 23 and back off. So it didn't do that today. So it's kind of there's a good and there's a bad here with the VIX. The good is that it didn't close anywhere near the highs of 28. The bad is that it got out of this range. So we'll see what happens with the VIX, but obviously I think it would be a good sign if we drop back below 20, which may take a little bit. So I think ultimately the main message of this video is that there's a lot of mixed messages. As I said, the good and the bad with the VIX and with the S&P and the Qs. So I think some patience is required here, with understanding that if you are buying the dip in anything. I had a trader ask me this earlier: what do I think of this stock? Do I think it, and I think it was more of a question of like, is it the right time to buy this? That's a really tough question to answer. what I always say is make sure that you have a stop price. Maybe use the low of today, and that could be your stop price. And then go from there. But there are no certainties when you're trading in this market. You always have to remember that there's no certainties. We go on probabilities and we go on levels to trade from, and where we are going to give a trade a shot, and then we know where it's not going to work. And that's trading 101. That's one of the most um, important things to learn about trading is that no one knows, right? We're always looking at setups and trading setups and looking for themes, but that doesn't mean that what we find is going to work, either from the entry point or at that particular time. So you have stop prices, and you don't want to put them too far away, especially with more uncertainty. The more uncertain you are about a trade, right, then the probably the tighter the stop that you want to use, so that you can get out to live to fight another day and reassess. And I think that's kind of the main message right now. We also know too, just to kind of end this video on a positive, is that we know that February was not a strong seasonal month. Was one of the worst seasonal months. So nice to get out of February. The thing that you have to do is you have to get out of basically the first couple weeks of March, because March is not strong, is not a on average seasonal strong first half of the first portion of March is not strong either. You get past that, and then the seasonality begins to improve. But kind of like last year, you don't want to put yourself in a big hole for when this market does turn and act better and stronger, as there will be and should be some opportunities. Leave it there, guys. Have a great night. See you tomorrow.